So the blue line, Bitcoin price. Red line is the BITO ETF. You see this correlation being lost right here. Look at the difference. You know, if I zoom in, let's say 6 months. Here we go. This is good. So it kind of peaked around here, and then our BITO ETFs were coming down. It's down 35% compared to Bitcoin price being down 4.15%. So now if I add in third line, gonna make it more complicated. I'll use the iShares one, the iBit, and let's look at it. So unfortunately, we don't have this much data, so we got to zoom in. If you look at it on a 6 month, look how tight the correlation is between the blue and the purple. Right, so this is the Bitcoin and then the iBit. So this is what I would prefer if I'm using Bitcoin trend following. You know, for my portfolio, I want something that's closer to the trend. You know, if you look at, like I said, the BITO, it's losing trend correlation. Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 6 of our portfolio and our investments. This is our ROI, return on investment, and we're going to go over our numbers. So this is our weekly numbers as of today, August 31st, Saturday. So we're going to go for our net worth. Our portfolio is $129.35 as of today, August 31st. This is our portfolio weekly data. As you can see, our chart, we've actually been coming down in our portfolio. You see we're down here at the bottom, down 0.37%. So there's been a lot of selling off of our assets. We have a market gain of minus 0.70, that's 70 cents. No net cash flow, with no incoming money yet. Usually when our deposits reach $25 minimum, then they'll auto deposit in. So we're still doing our weekly $10. And when it accumulates, it'll be invested into our portfolio. So again, this is our weekly return. You can see we're just at a downward slope here. This is our monthly data. Now remember, this is our first deposit here. This is about a 30% increase. Does not mean our portfolio gained 30% in terms of value. It just went up 30% in terms of cash value, so we deposited in. Our actual money weighted return is right here. We're up 0.91%. So we're up 0.91% for the month. Now last month, I think we were about 1.2%. So we were down a little bit since the previous week. But our monthly return as of this week is week 6, 0.91%. The market gain of minus 0.05 cents. And you see here's that cash flow right here, that $29.06. That's what this big spike was right here. That's when we deposited in some more cash into our account. Now here are our weekly percentages. So we have our government bond down 0.55%. And it's now at 30% of our allocation. So the previous week we were at 25%. And I talked about how the Federal Reserve basically signaled they're going to start lowering rates. And typically you have an inverse correlation between rates and bonds. So as rates go up, the price of the bond can go down. And if rates go down, the price of the bond can go up. So we're going to see if that's going to be the same case this time around. So I increased from 25% to 30%, as you see here. And then we have our gold position down 0.33% for the week. And we're still having it at a 30% allocation. Gold has been our best asset for so long, since going back to October. It's been a great asset. We have our UUP dollar ETF up 1.03%. This is what we decreased. So it was originally at 20%. We decreased it to 15%. And we took that 5% from the dollar and put it into our government bonds. Because as we lower rates, we're going to be devaluing the currency a little bit. So it's going to cause the dollar index to come down, which causes our UUP dollar ETF to come down. So I'm anticipating in September, if, air quotes, if they start doing rate cuts, we're going to start seeing that come down a little bit. We still don't know yet. I might be a little early on this bond trade. I've been early on bonds before, so this won't be the first time, but I'm just anticipating what might happen. We have our equal weight S&P 500 index up 0.84%. See right here. We still have that at a 10% position. We have our commodities ETF at up 0.15% here. And we still have it at a 10%. Remember earlier, a few weeks ago, we had this closer to 20% or at 20%. We've been lowering it because commodities have been coming down. And inflation has also been coming down. Then we have our Bitcoin ETF down 8.05%. It's a big drop. We still have it at 5% allocation. And I've been looking at the comparative charts of different Bitcoin ETFs, and the BITO ETF is losing its correlation with Bitcoin. And I think it's been happening more recently. So depending on the correlation of the asset, I might change it or not. We'll kind of go over that in a little bit. But as of right now, we're down 8% in 1 week. Now, this is our portfolio monthly percentages. So it's our monthly return. So this was our weekly percentage return. Now we're doing our monthly percentage return. So since we've been doing this longer than a month, now we can see both data sets. So our monthly return for government bonds is up 0.81%. Our monthly return for gold is up 3.73%. Our US dollar ETF is down 2.54% for the month. Our equal weight stocks are up 3.50% for the month. Our commodities index is up 0.32% for the month. And our BITO Bitcoin ETF is down 6.17% for the month. So again, this is our monthly returns. So we have weekly and monthly returns. And then when we hit that third month, the end of that third month, since we started in July, we'll start getting our quarterly returns. Then we'll have weekly, monthly, and quarterly. So you can start seeing a longer and longer and longer time horizon to kind of better understand how this portfolio works, not just in the short term, but also in the long term. That's what our goal is, long term. I want to build wealth slowly, right? Not get rich quick, build wealth slowly. Okay, so this is our portfolio transactions. So on August 26th, this is when we sold primarily here our UUP, our dollar ETF. We reduced that from 20% to 15%. So we sold $5.93. We also sold off the gains on these other ETFs, the RSP, our equal weight bond ETF, our gold ETF, and our commodities ETF. And then we bought into our government bond ETF $6.71. So we increased it from 25% to 30%. So this is our transactions. So buys and sells in here. So this is now a 30% allocation to bonds and a 30% allocation to gold. So 60%, more than half of our portfolio is in just two ETFs, bonds and gold. So I'm more cautious on the market and everything with what's going on. So 60% just in two ETFs, bonds and gold. So the majority of our portfolio. So here's our Illuvium staking dashboard. As of today, the price is down to $37.61. So it's been coming down. Bitcoin and other assets been coming down, but it's been coming down pretty good here. So our net worth is $79.44. We still have our 2.11 ILV that we have staked into the protocol for revenue distribution. As you see, this is the RevDiz we claimed before here. So this 0.0053 ILV. So we claimed this, and then when we added in our monthly deposit, we staked it all together. So the $40 we staked plus this 0.0053 ILV as well. So we added that into our staking. So here's our vesting, our week 6. So this is our very first one here, 1.32 ILV at the time of purchase. That was around $100. And we deposited it on July 2024. So it'll unlock in 330 days. So remember, you can lock it up for like a month or 3 months, a shorter time horizon, but your waiting will be less. So your rewards will be less essentially. So I want to double my rewards. So that means I have to lock it up for the maximum amount of time, which is 1 year. So I cannot unlock this 1.32 ILV until after the 330 days. I can claim the revenue from it, but I can't unlock what I've deposited, right? I can only claim the revenue, but once this unlocks, then I can claim it. And here's our second one, or we did last week, 0.79 ILV. This is around $40 plus the revenue distribution we added, and we locked it up on August 24th, 2024, and it will unlock in 357 days. So this is our second one. So every month they're going to add another one and another one and another one. We're going to see more and more and more. So we have no revenue distribution this week. This is incorrect. Should be week 6. My bad. We have no revenue distribution this week. So the revenue distribution is once they accumulate 150 worth of Ethereum in their vault, then they will distribute it. So whatever the fluctuating price is of Ethereum, but 150 Ethereum worth. So when that happens, we would get another payment here. So that's when I'll update you on that. So far, we've only had one, which was the other week. And we have no transactions for our Lufium portfolio. So because we didn't stake or anything like that. So those are our weekly numbers. So now, as always, we go into the charts. We start with gold. So gold's been going good. You're on a yearly chart. Remember, back to October 23, still in this big uptrend. So we're still long gold. There's no reason not to be long gold. It's doing great right now. If you measure it out, I think we did this the other week, but we'll do it just for fun. So the bottom of October 23 to right about here where we are. So we're up 37%, right? Over 334 days. We're up 37%. Almost basically, if I move it just a little bit more, 38%. So that's a pretty good run. Pretty strong uptrend. Gold's been doing great. There's no reason, like I said, to get out of it. I see nothing wrong with this trend. It's doing fantastic. So that's why 30% of our allocation is into gold. A big chunk because this big uptrend we're seeing. Government bonds. So again, looking at a 1-year chart, we had this wedge pattern here, right? Remember we were talking about this a few weeks ago? It was coming into this wedge, and then it broke out right here, and it shot up really strong. And you see it's kind of trailing. It came down and it's like trailing back up. It's kind of going sideways. So hopefully this trend will continue because, again, we've increased our bond position to now 30%. So just these two assets right here, gold and government bonds, comprise 60% of our portfolio. So if you look at, I keep pulling this up, but I just want to remind people, if you look at bonds on a 5-year chart, remember we had this long drop since basically the beginning of the COVID pandemic, came all the way down. And I'm hoping what we are is hitting this bottom right here and we're starting to work our way back up. So I'm getting in kind of early if this trend is going positive. I don't know yet. Nobody knows yet. But if I did it right, and this trend slowly creeps up, it's going to do good for our portfolio. But we're going to have to watch it. If the trend goes down, we're going to have to change out of it. It's not, I don't hold the money in the trend just because I want it. I'm a trend chaser. I follow what the trend is doing. So if it goes down, then I have to reduce my position. But I'm hoping, that 30% increase, 30% position, it's going to pay off for us. So then we have our dollar ETF. So again, this also came into a wedge pattern, but it broke down right here. So remember, we reduced our position from 20% to 15%. Now you see this kind of U pattern right here. Looks like it's going to maybe start coming back up. We don't know yet. But we sold out. We reduced our position in our dollar ETF. So this was the coming down part here. We have our commodities ETF. Now it was in this good uptrend for a little while, and then it broke down, but look, you see it's starting to come back up, but it hasn't quite came back up into this trend, right? We're keeping these bars up so we can see if it gets back into this trend. And if it does, I can see myself possibly increasing into our commodities position, but inflation has been coming down. These commodity prices have been coming down, so I'm not too sure if we would do that right away. We just have to wait and see what happens. But as of right now, that's still 10% position. It was a higher position when it was on the way up, and then it broke down, so we sold out of it. Then we have our equal weights. Here we go, and fix that. Our equal weight S&P 500 ETF. Now it's come back into this trend. It's going pretty strong, but if you look at it on a 5-year chart, it's still been kind of going sideways. If you can see this line here, it's been going kind of sideways, since it peaked January 2022, then all the way over here in March 2024, it barely peaked up, and then it came down. It barely peaked up, and it came down, and it's just started coming back up again. So for a 2-year trend, it's gone sideways, our equal weight. Now, if you compare that to the S&P, it's gone up better over those 2 years. It's gone peaked here, it's gone sideways, and then look at this bigger uptrend it's having right now. This bigger uptrend, right? So when it went sideways, kind of came from here to here, went scooped down and then came up, and then it's really coming up. But our equal weight ETF, it went more choppy sideways and it came back up, but it's still not much up higher than what it was 2 years ago. So, like I said, I'm still not too optimistic on stocks. It's just volatile times right now. We had that vol spike of 65, a few weeks ago on that Monday. I think it's August 5th. So still in volatile times. Then we have our Bitcoin ETF. You see it's coming down. And I've been looking at other ETFs because I think I might want to change to a different one just because I'm losing trend correlation with this ETF. And I believe it has to do with the spot Bitcoin ETFs that were approved not that long ago, that more people are moving into those, and maybe this is losing some trend. But it's been coming down. But we can kind of get an idea about that if we look at our Bitcoin. So let me just make it easy, remove these lines. So put this on a 1 year chart. So I see it kind of peaked right around here, March 2024. It's been coming down slightly. Now, if I compare our BITO, I'll do same scale. And then to make it easier for everyone, I will just make our chart a line. So blue line is the Bitcoin USD price. And this pinkish red line, what color is this? Pink? Let's make it red. Is this redder? Is that better? Let's go with that one. So the blue line, Bitcoin price. Red line is the BITO ETF. You see this correlation being lost right here. Look at the difference. If I zoom in, let's say 6 months. There you go. This is good. So it kind of peaked around here. And then our BITO ETF's been coming down. It's down 35% compared to Bitcoin price being down 4.15%. So now if I add in third line and make it more complicated, I'll use the iShares one, the iBit. And let's look at it. So unfortunately we don't have this much data, so we gotta zoom in. If you look at it on a 6 month, look how tight the correlation is between the blue and the purple. Right, so this is the Bitcoin and then the iBit. So this is what I would prefer if I'm using Bitcoin trend following, for my portfolio. I want something that's closer to the trend. If you look at, like I said, the BITO, it's losing trend correlation. I believe it's because you see right around here, this is where all the Bitcoin ETFs were started to come in. I don't know if it was exactly around this time, but early 2024. And you have basically spot Bitcoin ETFs now. So instead of owning cash equivalent in the ETF that just tracks the Bitcoin price, they own the Bitcoin itself in the ETF and it tracks the Bitcoin price. So it's having a better correlation. Now, another one we could look at, just to give you a better example. So let's look at gold. We'll remove these trend lines, make it easier for everyone. So we got our blue line, and then we're going to compare it to our GLD, which is our ETF that we use. Now look at this tight correlation. Look how tight that correlation. You can almost barely see the difference between the blue and red. It's so close, right? This is what I want, because I'm owning the ETF that's holding the asset or a cash equivalent to that asset and tracking the price. Look how tight this is. Right? This is exactly what I would want, because if gold's going up, I want my ETF to go up. Gold's going down, I want my ETF to go down. I want a nice tight correlation like that. If we look at one more, and this one actually will show actually an issue with ETFs, I think. Let's see. Again, we'll get rid of these lines. This is all extra lines of stuff that I use for my investing. Try not to make it too complicated for everyone. So if I include the UUP, which I got right here. Now, if I look at it on a 5-year chart, get rid of these lines, get rid of these lines. The trend correlation is pretty good coming through here. This is like 2020 to 2021, going into 2022, get rid of these lines. And then 2023, there's like a drop right here. Look at this loss of correlation that's happening right here. I'm not even fully sure why this happened, but there was a drop, right? We lost correlation. So correlation was going good up here. It's getting kind of separated. And then bam, the UUP, which is the reddish color one, just broke correlation from the blue line, which is the dollar index. But it's since recovered. Like look how much it's came in now. It's closed in now, right? So like it lost it here, but then it's working its way up. And it's closer now. So I think it's kind of recovered. It's trend correlation to a degree. You see it's still kind of like off here, but it's with a few percent. $0.049 ETF plus 3.48 UUP. So the UUP is actually doing better since the start of this year. But the point I'm showing this is because I'm concerned with the BITO ETF losing correlation. And I don't know if it can regain its correlation or if it's going to stay as it is. So you see, look at this huge divergence here. If I look at year to date, look at 6 months maybe, you know, this is quite the divergence and it doesn't seem to be recovering. So I might change to a different ETF that has better tracking. So if I bring in the IBIT, the IBIT, you know, look at the purple. Look how tight that correlation is to the blue line. That's damn near perfect correlation. You know, that's what I want. So there might be a change coming up, possibly. I'm still thinking about it. Bitcoin's only 5% of the portfolio, so 95% of my portfolio is not being affected by this. But I am thinking about it because I do want, again, trend following. You know, I'm a trend chaser. I'm following the trend. And this is not keeping the trend in the way that I like to my asset. So that might come to a change in the future. We'll see. I'll update you on that. And of course, there'll be a transaction. I'll get hit on my taxes because I'm selling out of one asset and buying into another one, even though it's the same asset technically. That's fine. I'll deal with that. But as for now, you know, that's our update. I just kind of want to go over that and just want to cover the correlations because again, this is, I want assets that follow a certain trend. You know, my equal weight S&P 500 index will not track as well to the S&P 500 index because the S&P 500 index is not equal weight. So I expect there not to be correlation. That's fine. You know, my commodities ETF won't track a commodities index that well because of how it's weighted. That's fine. My bond ETF won't track an individual bond's price because it's more of a spread out between the 30 years. So the GOVT ETF has 30 different ETFs in it, 30 different bonds in it from a 1-year bond to a 30-year bond. So it won't track exactly on certain bond index. That's fine. Like those ones are fine. But my gold ETF should track the price of gold because it's just gold in there. And my dollar ETF should track the price of the dollar index because that's all it is, has dollars in there. And I want my Bitcoin ETF to tightly track the Bitcoin price. You know, so 3 of my ETFs are more equally weighted. So there won't be as good correlation, but it'll be consistent. And then 3 ETFs are tracking a specific asset. So I want them to be more tightly correlated. So I'll go over that more in future weeks if I make that change, and I'll let you know. But as of right now, you know, these are the numbers. As always, I hope this was helpful. If you have any questions, concerns, or criticisms, let me know. And I'll keep updating you every week on the growth of this portfolio. So thank you and have a good day.